Hello, welcome back. Mindy here with Econologics Financial Advisors, and we are doing our 4-part video series on financial success. Okay, so this is part 2 of 4, and today we're going to talk about the 4 ways you are bleeding money. Now, if you missed part 1, which was the 3 biggest money mistakes, you got to go back. So go back and watch part 1 before you watch this one. All right, so stay tuned because Eric's up next.
There are areas where we see practice owners bleeding cash, not only in their business, but in their household. So I want to make sure that you know these areas so that you can repair them. Now, when I say bleeding cash, I'm not being dramatic. These are areas where you are hemorrhaging money. These aren't just little leaks. This is hemorrhaging money. So we definitely want to make sure that we address them. Area number 1 where you're bleeding cash is your business value. What do I mean by that? Well, when you aren't treating your business like a business and you aren't making sure that it's profitable, then you are definitely diminishing the overall value that that business has to your household. I'll give you an example of that. Let's take $1 million practice that has $100,000 of earnings. Well, likely that practice worth is about 2 times its earnings, which would give it about a $200,000 value. Let's take that same $1 million practice that has $300,000 of earnings. Quite likely it's going to sell for a multiple of 3 of its earnings. So that's $900,000. So the difference between the same revenue practice, but a well-run and a not well-run practice is a $700,000 difference in value to the household. That is hemorrhaging money. The second area that you're bleeding cash would be not expensing profits. A lot of you are always wondering, where's my profit going? And the reason that you don't have profits is because you simply aren't incorporating them as an actual necessary expense. So you have $1 million practice or a $2 million practice that just spends everything that it makes and then some, and nothing is there for the household. Well, those practice owners that have figured out how to expense their profits and make sure that they're taking 10% of their practice revenue and channeling that as an expense to their household are able to make sure that they recoup money and retain money much better than those that just allow the business to spend everything that it makes. Now think about that. If you have $1 million practice and you are expensing 10% of its revenue, that is $100,000 a year. Now think about that as far as your practice and saying, my gosh, if I've been doing that for the last 10 years, I'd have $1 million. That's a big area where you're bleeding cash. The other area is, of course, debt. And when you look at the amount of debt that most practice owners are carrying, they're probably paying almost $20,000 to $30,000 of just interest costs on carrying really, really bad debt. And then, of course, the last area that you're bleeding cash, no surprise, taxes. And because you're not proactive in trying to minimize your tax liability, most practice owners are overpaying, wait for it, $20,000 to $40,000 of money that is just going by the wayside to the IRS because you don't have a good plan on how to retain that money and minimize your tax liability. Add all that up and it's a little bit depressing. It's probably $500,000 to $600,000 of value that you're simply giving away that you don't need to. But now you know. So those are the 4 areas that you might be bleeding cash. They're definitely correctable. You just have to take some action and make sure that you're not doing them. This is Eric. Be a really, really good financial friend to yourself. Do well.
We hope you enjoyed the 4 ways you're bleeding money. So remember, that was part 2 of a 4-part series. So if you missed part 1, which is the 3 biggest money mistakes, you're going to want to go back and watch that one. Now, next up, we're going to do part 3 of this 4-part video series, which is financial measurements and metrics to measure your financial success. You definitely don't want to miss that. We're going to drop that in 2 or 3 days. So be on the lookout for that one in your inbox, and we'll see you there.